And join us on this podcast as we explore digital assets from a CFO lens. So with me in the virtual studio, Mike Leek and Ranald. Hopefully I pronounced that correctly after years of not pronouncing it correctly. Excellent, good stuff. Mike, Ranald, welcome.
Thank you, sir.
Chaps, did you want to introduce yourselves, give us a bit of background about what work you do and how you became interested in digital assets? Ranald, did you want to kick off first?
Yeah, sure. So, hi everyone, my name is Ranald Kuo, and I guess I'll give a bit of background about myself. So I've worked in the banking industry for past 12 years, and I've always kind of had a I guess I've got introduced to the digital asset space early in 2013 when a colleague of mine told me, hey, you should invest in cryptocurrencies, but I regrettably did not. But I think throughout the years I just got a lot of exposure to Bitcoin and cryptocurrency. So in 2017, when there was that big bull run, that's when I guess the whole FOMO got into me and tried to do a bit of research, lost a bunch of money, didn't touch it for a couple of years. And honest truth, I only really got into it in 2021, so just last year. So it was like a bit of a nerd. So there was a video game called Axie Infinity that came out, and that's what really got me into cryptocurrencies and doing a lot more research into digital assets and wallets and how to transact on the blockchain. So I really do believe in the digital asset space, this whole new world of decentralized finance, and how it can unlock a whole market of potential. I've recently changed jobs out of traditional banking into a centralized finance company. So I thought, why not just immerse myself in this whole new world? But yeah, I think that's enough about me. Mike, did you want to give an introduction to yourself?
Thanks, Ranald. Yeah, sure. My history is a bit longer than Ranald's, unfortunately. I have been in finance, traditional finance, for over 20 years. And like Ranald, I recently made the jump into the world of crypto. I'm not working for a cefi platform, but rather a fintech firm that aims to bank the crypto community. Which is an interesting space to be in, as the traditional banking sector are not very accepting of crypto-focused clients at this stage. But my career has been in both American and European banks across a few different functions within finance, so mostly valuation control and product control. My intro to the crypto world, or where my interest started, was beginning of the COVID lockdown, when everybody needed a new hobby. Some people got fit, some people got fat. I decided to learn about crypto, and it's one of those like rabbit hole discoveries that you just keep burrowing deeper and deeper and getting more and more immersed in it, and you learn new things, you unlearn things that you thought were factual that you learned at university. And yeah, it just keeps going and going, and I've been fascinated by it. And I've probably got to the point now where I don't get invited to dinner parties as much as I used to.
I can actually imagine that.
I'm that guy that doesn't shut up about Bitcoin. In fact, whenever I make a purchase from a local store, I have to bite my tongue not to ask if they accept Bitcoin, just because I think that if enough people say those kind of things, then we'll be furthering adoption. That's how much I believe in it. But yeah, that's enough about me. And I'm very excited to be on a podcast talking about my favorite topic. So thank you, Peter.
Yeah, I did like that comic strip you sent through over the group chat the other day. I thought that was very related, very strongly to that dinner party. Lack of invites there. Yeah, good introductions. I think I came to the digital asset Bitcoin party later than you guys. I know Ranald, when we worked together in 2000, 16, 17, something like that. 18 perhaps. You were dabbling in it back then, and I didn't understand it, and I thought it was just a fad, and I thought it would go away. It was very volatile, and I didn't take any interest in it whatsoever. And then in 2020, I think it was November, I was in Malta, and one of my friends gave me a free copy of the Bitcoin Standard, and it changed my view on everything. I think what Mike was saying about things you learn in university, you don't really question, you accepted. For me, I just started to realize that the value of money and the way that the world issues money and manages money via interest rates and things called quantitative easing and tightening, that there's more to it behind that rather than just sophisticated terms and all these respected institutions like central banks which manage these particular forms of money. So when I saw that humans have only recently started to use paper money, which isn't backed by anything of any substance other than the promise that the government will repay or make good on that money, that's when I realized that, we have a problem that needs to be solved. Why I didn't realize it and more appreciated the point the book was making. So for me, I think the value that I see in Bitcoin is immense. The problem that I had is that I didn't realize that the implicit value would take so long to catch up to its explicit value. So, Bitcoin's trading around $21,000 at the moment. I think it's got a enormous way to go, but obviously it's going to take time for adoption to help it grow in value. So that's a little bit about me and digital assets. I'm not in the digital asset space from a work perspective. I'm running a training business that I set up in 2015. And like Ranald and Mike, I mainly worked in banks all my life in product control, financial control, valuations, that kind of work. So very similar. Very similar.
Yeah, I like how you mentioned the volatility back in 2017. It seems like it's just as volatile in 2022. Prices are very similar too after 5 years.
Yeah, it's not pleasant. Look, I went really long into mainly Bitcoin, some other digital assets as well, Ethereum and like the Link and a few other things. And oh my goodness, my stomach. I had stomach ulcers for sure in June 2021. Yeah, June 2021 for sure, when the market just reached the top of 60-something thousand dollars and then dropped right down to high 20s or 30. And I just wanted to cry. It was so difficult to accept. And then I think a year further on, where it's dropped back down to 18,000 or whatever, it's not pleasant, but it's easier to take. And I mean, that's what these podcasts and these group chat channels are for, to encourage us through the tough times.
Yeah, I mean, I experienced all of that with you, Peter, and I would say that there was there's a book called The Bullish Case for Bitcoin by Vijay Boyapati, and it's quite a short book. It's a good book. I mean, there's a lot of good books out there. I'm not going to get onto that, but there's one section of that book I particularly enjoyed, and which was talking about the Gartner hype cycles of adoption, and it's expected to do these big run-ups, big drop downs, but it's about creating higher lows in each cycle, because that's where in each cycle you get new adopters that truly believe, but you get a lot of people that are just speculating on the bubble. And as long as every cycle increases the number of true believers and people that are actually adopting Bitcoin, then we're going to see higher lows in each time it does those big moves. So that made me feel a bit better, maybe cured the odd ulcer.
Yeah, it's an interesting point to make. What do you think will increase the value of Bitcoin? Do you think its real world use will help increase the value?
I do. I think that over time, more and more people will understand what it actually is. I think that we're in the very small minority of people that understand the use case, and you mentioned the intrinsic value of Bitcoin, and that over time will increase, and it'll increase most likely in those parts of the world where the value is highest, and we don't live in those areas. So areas where the majority of the population is unbanked, and have extremely high inflation. We think we have high inflation in the UK now, but we don't, not relative to a large part of the world. So those are the areas where an asset with an asset with a fixed monetary policy and a payment network that is all inclusive has the most power. So I expect to see more adoption in those areas, and that over time will drive the value up. But I think the longer you're in it, the more you want to see the adoption increase, and you're less worried about the value, and the value will just kind of take care of itself over time.
Yeah, I think adoption is the main key here.
Yeah.
The way I think what really pulled me over the line was when I think it was the CEO of a superannuation fund mentioned that cryptocurrencies or Bitcoin can be considered a store of value. And when you have pension funds or these retirement funds saying those kind of statements, it's kind of like validating the fact that, okay, like I'm not the only person that thinks that this is a store of value. And this is like, if you look at that, just the cash allocation of retirement funds, there is a whole lot of unlocked potential of adoption that's still to come in my eyes. And this is just from, I'm talking from an Australian retirement fund point of view. What about the rest of the world? So there's, I think there's still a long way to go.
But do you think it's going to be the adoption from an investment point of view, or actually real world, like Mike was talking about, where we're not living in sub-Saharan Africa, where a lot of people don't have access to a bank account, so they can't set up utility accounts, etc. They may not be able to get paid for getting a job into a bank account. Do you think it's going to be more of that kind of adoption where people find real world uses, like even sending money over the Lightning network via Bitcoin, which helps speed up payments in the real world for developed and undeveloped countries? And then in undeveloped, we have the people getting access to a bank account so they can improve their lives and also convert their highly inflating currencies into something which is less inflating. Do you think it's going to be more adoption from that perspective, or from the investment perspective, like pension funds and more fund managers getting involved, or more retail accounts being opened up to invest in Bitcoin?
Yeah, I think it's a bit of both. It's hard to say which one more over the other. I think they need to coexist. So I guess the more adoption from a payments point of view, and the more people that see I guess Bitcoin as a store of value, then I think both cases kind of like rise with each other. But I don't have a crystal ball. Wouldn't be able to tell you which use case is more likely than the other.
I'm hoping it's the real world use case rather than just putting more money into it. I get surprised every time the price drops below a certain level and the market commentary mentions leverage being cleaned out, and I'm surprised that leverage is still in the market, and I'd like it to go away personally. But yeah, while we're talking about Bitcoin, Mike, did you want to explain to everyone what Bitcoin actually is?
Oh, I could give it a go. How much time you got? No, that's a good idea though, because we've mentioned a few of the points that you'd have to mention when describing Bitcoin already. So it's good to kind of frame that. So the way I describe Bitcoin to people for the first time now has changed a lot over the last few years, and I think that it was steered quite significantly by a description of Bitcoin that I listened to on YouTube by a gentleman by the name of Peter Van Valkenburg at Coin Center, and he was addressing some committee in the US. But I really liked what he had to say, so I'd recommend anybody looks at that on YouTube. We can put that in the show notes if you don't mind, Peter. So I will give my own version of that description with some of my own points added and some of his removed. But essentially, Bitcoin is two things. One is a payment network, and one is a digital asset. So I'll focus on the payment network first. The payment network, why it's significant? Because we have a lot of payment networks already. There's Visa, there's PayPal, there's Swift, there's a number of them. What makes Bitcoin different? That is that it is a public infrastructure. It is the only public payment network infrastructure in the world today. What do I mean by public? I mean not owned by anybody. No private institution owns the Bitcoin network. It is accessible by anybody, no matter who you are, where you are, what religion, what color, what sex, what credit worthiness. It is open to everybody. And that is extremely powerful. So that payment network allows anybody to transfer value from point A to point B. It's as simple as that. So that's the one side of Bitcoin, is there's the network. The second one is Bitcoin, the digital asset. Now, Bitcoin, the digital asset, is needed to have value for the payment network to exist and for people to put time and effort into the payment network. So there needs to be an asset within that network that gives it value, and that's what Bitcoin is. Now, the power of Bitcoin as the digital asset is that it has a fixed monetary supply, so it cannot be inflated. So there's only ever going to be 21 million Bitcoin. That can never change. And we have currently created about 19 odd million of those Bitcoin, and they get mined at a decreasing rate over time, all the way up until the year 2140, I believe. So that's what it is. So it's a scarce digital asset that is a store of value, and that is the store of value within this payment network that I've described as the public infrastructure. So that public infrastructure has no single point of failure, which makes it extremely powerful. It can't be hacked the same way that Google or Facebook go offline for a number of hours when they get cyber attacked. You have 14,000 nodes, I believe, on the Bitcoin network. So you would need to take more than 50% of those offline to attack the Bitcoin network. I hope I've done that description justice. I could go on to a large number of other points about the mining, proof of work, but I think that gets very technical, so I'll leave it at that for now, Peter.
I think that's a really good introduction. Ranald, did you want to comment any more on what Mike said about Bitcoin, or add anything further?
No, I think Mike's hit the nail on the head. That's exactly what Bitcoin is. There's so much to unpack when you just talk about Bitcoin. Like the way that Mike described cryptocurrency or digital assets being a rabbit hole, like I think that's even like an understatement. Like the way I look at it, it almost feels like a rabbit hole or multiple rabbit holes on top of an onion, and each layer you unpeel, there's like more rabbit holes. So it's like it's
That's
just
so
endless.
True. That is so true.
So I think we can talk for hours about the topic, but I think for the context of this conversation, we'll just keep it simple, and maybe we can dive into more details in later episodes.
Yeah, no, good point. I think for me, the thing that I love about Bitcoin is the fixed amount of supply, how it is a global network. There's not one jurisdiction that can control it. I just think, wrapping your head around that I think it was difficult to start with, because it is so unique and we don't really know who created it. And you've got developers obviously working on it through the Bitcoin Foundation to make sure that its integrity continues for time to come. So I mentioned in the show introduction that there's all these terms in the digital asset space, and we're not going to cover all of them today, for sure. That's for sure. We've looked at Bitcoin. Ranald, what about DeFi or cefi? Did you want to take a crack at one of those?
Yeah, good. Give DeFi and cefi a go. I work in the cefi space, so I'll try provide as much insight as I can. So DeFi and cefi is short for decentralized and centralized finance. I think depending on who you ask, they will give you a different answer as to what does it mean. But the way I would approach it is to try to draw parallels with our existing finance world. So finance in this context, I think, is two things. Firstly, payments. so payments for an asset or goods and services, and secondly, borrowing and lending. So for, I guess, like in our existing world, these two services are all provided by large institutions, banks, private companies, and everything is done through middlemen or these middle institutions. So what DeFi tries to do is disrupt this entire ecosystem by linking the two parties on either end of that transaction directly together without a middleman in between. And ultimately, the reason why we have the ecosystem set up this way is because of trust. If I'm trying to transact with another person, and there's a contract that's supposed to facilitate that transaction, I need to be able to trust that the other person on that other side of the transaction is going to follow through with the terms and conditions. The one way to do that is through these centralized institutions. So what DeFi does is recreates that trust through code. So what's called smart contracts, which is essentially a program that is set on a blockchain. So if certain predetermined conditions are met, then a certain transaction will be signed off or followed through. So it's really a way to connect finance with two people anywhere in the world, which is without any financial institution or middleman, which is just a fascinating prospect. In terms of cefi, it's the way I see it is you have decentralized finance here, and then our existing traditional finance where you have centralized corporations. cefi sits somewhere in the middle where you have private companies that operate these services. So they mainly act as a bridge between the traditional finance world and decentralized finance or cryptocurrencies. So I think mostly you'll have people who are used to the way we do business in the existing world who adopt centralized finance platforms. So these are your Coinbases, Binances, your BlockFis, and as you can see, like, these, even though people trust these systems or companies more because they're used to it, they're also not completely risk-free, as we've seen with what's transpired in the past 2-3 months with Celsius and 3AC collapsing the whole market. But I think that in a nutshell is what cefi and DeFi is. The only thing I'll add on top of that is Mike's touched on the biggest cryptocurrency, which is Bitcoin. DeFi is predominantly banked in a protocol called Ethereum and a cryptocurrency called Leek, and that's where all these smart contracts are made.
Yeah, good explanation. What separates Bitcoin from Ethereum and these other what we call? Would you describe, so the digital asset world? We've got Bitcoin, we have Ethereum, we have all these. Everything else is called altcoins. Would you include like Ethereum as an altcoin as well? When people talk about altcoins.
Again, I think it depends who you ask. The way I see it is Bitcoin is superior to everything else on the market because one, the code is set, no one can tamper with it. The monetary policy is set, nothing can change. Ethereum is slightly different in the sense that it's not just a store of value, it's not just the payment system. They have smart contracts attached on top of that. But the fact that there is a ability to change the way the network works, also puts a bit more of a centralized governing body over the Ethereum network. So prime example is, I think this week we're supposed to have like the first part of the proof of stake change, which is the merge. And so that's already a very obvious example of how the policy of Ethereum can change, whereas Bitcoin cannot.
Can I chime in there, please, as the maximalist on the call?
Yes,
Thanks.
please do.
So my view is that Bitcoin is separate from everything else in the digital asset space. It shouldn't even be viewed in the same under the same umbrella. Bitcoin threatens to be the disruptive new form of global money. Everything else is they cite use cases, and potentially some of them are real. I don't know. I'm not an expert. But none of them are trying to be global money. If anybody that thinks that Ethereum could ever be global money is smoking something, because it replaces the problems with fiat with the same problems in Ethereum. What Ethereum could potentially do is be this, new tech company that offers services in a centralized way, the same way Facebook or Google or something like that. That's completely possible. I'm not tech savvy enough to opine on that, but it's not threatening to be global money, and I don't even think Bitcoin dominance in the crypto ecosystem should be a thing, because Bitcoin is just separate. Bitcoin's money, everything else is like, a tech solution to a potential problem that probably doesn't exist, but maybe does in a few cases.
The way that I think about Bitcoin and then like the Ethereum to me is like a shopping mall where you go into a normal, Westfield shopping center, and then you've got hundreds of different stores there. For me, like the Ethereum is like going into a virtual shopping center, and you've got all these different stores where you can borrow and lend and buy NFTs, sell NFTs, that kind of thing. Whereas with Bitcoin, it's all about a payment network and a store of value. That's sort of how I see the two.
Yep. Very simple, very clean, never changing. It's been online today for 4,999 days, Bitcoin. Ethereum has, had hacks. They've rolled the code back at one point to undo a hack. I mean, can you imagine rolling Bitcoin code back? That would never happen. So yeah, they're very different. I'm not one of those maximalists that believes everything else is a shitcoin and a scam. I'm not saying Ethereum is a scam. Maybe it is, maybe it's not. But it's not challenging Bitcoin. It can't challenge Bitcoin. You don't have to choose one or the other. You choose to save in Bitcoin. You could choose to invest in Ethereum. But I don't see Ethereum as a saving, and I really don't see Bitcoin as an investment. That's the way I kind of keep them separate. Yeah. But on the cefi DeFi thing, I think that's an interesting point that Ranald was talking about. And recently I've been thinking more and more about what holds the adoption back in Bitcoin. And I think a lot of it is because people are so used to centralized organizations kind of taking risks or protecting them from the risks of looking after their own assets. So a bank account, if your credit card gets lost and somebody spends money, they can often protect you through insurance, and you get your money back. And you forget your password or your PIN, and there's a helpline, and they fix it for you. Like we're not used to taking responsibility and looking after our own security. And when you own your own Bitcoin in your own wallet, then you are responsible for those private keys. And if you send a transaction to the wrong place, it's gone forever. Like that's you can't roll it back. So
well, you can't send it across a different a non-native blockchain usually either, can you? Like you lose it, it's gone forever, and that's incredibly scary when you first start dealing with these things. I remember when I was doing my first transfers, I was calling you and checking, is this the right thing to do? And then I do a really low value. I think it was when I was transferring money to Celsius or something. Maybe something like that. Anyway, I was just doing a tiny fraction of a transfer in case I got it wrong. Because you're right, you could lose it.
Yeah.
There's no help desk.
Exactly. So Bitcoin requires us all to take more responsibility for our own assets, our own savings, and our own actions. And I don't think the majority of human beings are ready for that. And I don't think many of them will ever be. So like that, I think, is the biggest thing that holds us back. So therefore, you get these cefi platforms. So what they do is they try and replicate the traditional world of finance with all the hand holding that the traditional world gives us in a crypto world. So you get exposure to Bitcoin, but you don't got to worry about your own private keys or passwords, and there's a help desk that can fix it. Like, say, it's kind of like a halfway house that drives some adoption, but with that comes different risks. And the main one of those risks is that central intermediary. Bitcoin is a trustless network. There's a saying that says, "Don't trust, validate." That's what Bitcoin is. But then you insert a central organization holding the Bitcoin for you, and you've got that single point of failure again. You're trusting a corporation to be a good actor, to do the right things, and recent events have showed us that that's not always the case. So I think there's like a gap in the market, or there's a solution that hasn't yet come to the fore, where we can find a way of increasing Bitcoin adoption and all the wonderful things that gives us as a society, but without exposing people to these catastrophic risks where you can lose your life savings because of an accident. So I think that's a really interesting space, and I'm not sure if cefi will exist long term, but at the moment that's the best solution we've got.
Yep.
To protecting people.
Yeah, exactly. I mean, I think the whole cefi space just acts as a bridge at the moment. And to your point on, one of the core defining features of Bitcoin is its immutability, and that in itself is what you're talking about, is holding it back as well, because it's immutable. If you make a mistake, then the mistake is permanent. You can't take it back. Yep. So I mean, like even in the cefi world, when transactions take place, like they do the exact same thing as you, Pete. Test transactions get sent through, like for $5, for $10, because it's immutable. Like you can't change the transaction. So it's just I see it's just an inherent risk. But once people truly start understanding it, it'll just take time for full adoption. But it's very hard to see 100% adoption. There might always be a space for these cefi platforms where ultimately people are more comfortable, but that also comes with generational gaps as well. Like my parents probably aren't as comfortable with working on a computer as I am, and then my son might be much more savvy at the digital asset world once it matures than I am, or maybe something completely different. But I think this is just something that will take time to mature.
Yeah, I think perhaps easy access points would make a big difference, making it more seamless and making it have a reason to get involved with cryptocurrencies and Bitcoin as well. I think I mentioned to you guys that I trained about 16 people up recently, all fairly young, definitely below the age 30, or most of them anyway, and not one of them owned or traded or used Bitcoin. Only one person was involved in some altcoins. They thought it was a really interesting space to be in, but I was surprised because we talk about the older generations, and I guess I'm approaching that now, but even older generations not wanting to get involved in the digital asset space. And yet the younger people are also, not all of them are getting involved with the digital asset space. So I'm curious as to what's going to change. I think I've been doing some traveling recently, and what I noticed is that so say Singapore, for instance, you go into a Singapore department store, and no joke, there's probably about 5 or 6 different merchant terminals you can use to pay for your goods. What I noticed while I was traveling through Scotland and then back through Australia and Thailand too, is that we've got these new types of merchant terminals which have nothing to do with banks, at least from what I think, like things like Square and other providers as well. So I'm hoping that perhaps we'll see Lightning networks appear all over the world to get people familiar with or more interested in trying out these new blockchain payment technologies, I hope. One thing I did want to bring up is that when we're talking about cefi, the digital asset space has these what do you call them, cult followings, I guess, which can be a bit disturbing. I mean, the terminology that gets used, we're going to the moon, going to the moon, hodl, diamond hands, all these things. But I think it's like the people sort of protecting their own turf, or either you're a Bitcoin maxi or you're not. There's no people seeming, not a lot of people, sorry, not a lot of people. There are groups of people who don't want to find middle ground. They don't want to be pragmatic. They don't want to listen to other people. Part of this community also doesn't want regulation. They're like, no, Bitcoin is like, I have my right to privacy. It's the kind of like the new world order of money, and we want to do away with the old. What we've seen with all these collapses, so we had Terra Luna collapse, we've had Celsius collapse, 3 Arrows Capital. What we're seeing is that I think regulation does serve some kind of purpose, whether it's in traditional finance or in this new digital asset space. And so what I found difficult to accept with the collapse of Celsius is that you had the CEO coming on to various podcasts and not disclosing the risks that he was taking with our money. And for me, I thought that was extremely dishonest, to say the least. And I was aware that he'd previously disclosed that he's working with the regulators all the time, assuring them how their business model works. After they collapsed, we found out that he was personally making trading decisions, and he was getting involved in derivative trades to try and make back money from having not enough yield to pay investors that he was promising. So, yeah, I think that part of the Bitcoin crypto world, digital asset world, whatever you want, the culture, we kind of need to go through a process of maturation so that we can see the benefits of regulation and governance in this new space. So it's not all just about Second Amendment rights or whatever. It's about actually there's a purpose for having regulation and governance, and there's not one extreme or the other. There needs to be some balance there. It's my 2 cents worth.
I agree with a lot of what you've said there. I think that the regulation needs to attack's a bit of a strong word. It needs to focus on the centralized players in the market, not on self-custody wallets and things like that. I don't believe that's where the regulation is required. I think the regulation, there should be regulation on cefi platforms to ensure that they are not gambling on the Fed rate decision with large amounts of the money held within that cefi platform, because that's exactly what was happening at Celsius apparently. So yeah, I'm with you on that. I think any exchange which an exchange is a cefi platform in itself for people that are too lazy to remove their coins. Not necessarily lazy, actually, just what we spoke about earlier, a little bit scared of the technology and transferring them. So so exchanges that hold coins should be prevented from doing fractional reserving, and the same for cefi platforms. So there should be restrictions placed on what investment decisions those cefi platforms are involved in. And potentially there's one cefi platform called RELIED, where if you hold any coins on their platform, they send you a proof of reserves statement, I think every 6 months, but I might be wrong. And those kind of things that they are doing without being told they have to, I think those should become more the norm in the cefi space. So yeah, I couldn't agree more on your points on regulation, but I don't believe that your self-custody wallet should be subject to any sort of regulation and things like that. I think that sort of privacy should remain.
Yeah, I think I completely agree with what both of you said. The one thing that comes to mind is I think regulation is ultimately there to protect retail investors or the retail markets or customers, making sure that people aren't losing their life savings in these speculative investments. And what doesn't really help, I guess, regulators. So I live in Singapore, so I follow the MAS and the actions in the space quite closely. And then when you see a lot of these companies going under, they're always based in Singapore, like your 3AC, Do Kwon Terra Luna is based in Singapore. There's a whole number of smaller cefi or exchange platforms going under as well. So I think that puts a lot of pressure on MAS to kind of have a fixed or certain view on this space. So I think they're very pro digital asset innovation, but they just don't want people speculating or gambling their money in this kind of way.
Yeah, Singapore is an interesting case actually because they are very pro innovation, but their citizens are discouraged from gambling. I think it's still, I mean, a lot of citizens go to Indonesia to go on a boat and do gambling. They've got to pay to enter the casino, whereas foreigners don't. So I guess that's probably where they're coming from in trying to dissuade people from getting involved in I mean, there's hundreds of different crypto projects you can get involved with, aren't there? Digital asset projects. So, I mean, hopefully the dodgy ones get rooted out over time. But I mean, that's the case with everything. There's always dodgy stuff going on. There's not lots of, I don't have statistics behind this, but there's dodgy investments the world over. And I guess the digital asset space is definitely a bit of a wild west at the moment. And Bitcoin, you can put your highest amount of trust in when it comes to this particular sphere of assets. It's not financial advice either.
Sorry, I was muted and I was having a chat. We don't do financial advice on this podcast, but to your point there, I think a lot of crypto projects will be captured by securities law at some point, and that'll be interesting space in the regulatory space just to see how that plays out. I think Gary Gensler has mentioned a few times points around that, and has mentioned that Bitcoin, in his view, is a commodity rather than a security. So Bitcoin hopefully will not be touched by that, but a lot of them are like pseudo equity type investments. So securities law will impact a lot of those projects. So yeah, I mean, that's an interesting space to watch. But Bitcoin's fine, so that's okay.
We saw, I think it was this week or maybe the week before, where the Treasury is advising the government that they need to come out with regulations for the digital asset space. And we've already got the crypto lobbyists trying to push the government down the route of using the CFTC, so the Commodities and Future Trading Commission, as the regulator for digital assets rather than the SEC, because they view them as more industry friendly. I don't know the difference between the two. I just know that Gary Gensler is a popular figure when it comes to talking about regulation and cryptocurrencies.
Well, he gave a course on Bitcoin when he was lecturing at university back in his earlier career, so he knows a lot about Bitcoin, apparently.
So do you, Mike?
I don't ever say I know a lot. I'm just a mad enthusiast. That's what I am. But yeah, should we talk a bit about like RWA and like what also like that sort of side of the reg stuff, like reasons why banks are less likely to put Bitcoin on their balance sheet at this stage of the adoption? Because I think that there is a like, I mean, if you look at Tesla, they've put Bitcoin on their balance sheet and then sold some and then sold some more. And there's a few other companies, not many, but there's a few companies that hold Bitcoin in their balance sheets. In terms of publicly traded companies, not many at all. But MicroStrategy is the famous one, and apparently they're raising another 500 million to buy more Bitcoin at the moment. So that'll be interesting to see how that plays out in the next few weeks. Thank God for Michael Saylor. But that's another central point of failure in the whole ecosystem, right? If anything happens to MicroStrategy, that could be catastrophic. But where was I going? Oh yeah, so RWA. So banks, for those that don't know, are charged reg capital for their RWA, which is their risk-weighted assets. So every asset that they hold on their balance sheet is given a risk weighting, And from that, there's a calculation that determines how much liquid capital, I think HQLA, high quality liquid assets, that are required to be held on the balance sheets of that bank. And for Bitcoin at the moment, they are, the highest risk weight. It is the highest risk weighting. And for every dollar of Bitcoin you hold, you need to hold $1.41 of liquid capital. So the cost of holding Bitcoin from a reg cap perspective is extremely high. And that's going to hold adoption back for using Bitcoin as a treasury store of value asset on the big balance sheets. So I think that's an interesting point. Over time, maybe that changes, but I can't see that changing anytime soon.
Yeah,
So
that's interesting. So we've got like the Basel controlling the treasury ratios, how much liquid cash you need and how much stable cash flow you need, or how many stable liabilities you need to fund your assets. And that LCR, liquidity coverage ratio, comes in for the first 30 days of your cash requirements, I think. So they're saying that Bitcoin, you can only use, like, it's a ratio 1.41, is it?
Well, I forget all the calculations, but for the highest RWA, it's 700%, and then you do a calculation based on that 700% to determine what the actual cash holding required is. And there's a presentation at the firm that I work at the moment where he said it's about $1.40 per dollar of Bitcoin on your balance sheet, which is significant.
Interesting.
And the other thing that's interesting from a CFO accounting finance space on Bitcoin is around its classification with accounting standards. So it's not classified the same way that a traditional fiat currency is classified. It's classified as an intangible asset, so it's classified in the same way that goodwill is classified from an accounting perspective. And what that means is that so it's classified as an intangible asset of indefinite length. That's the exact definition. So when you have gains on Bitcoin, so if you buy it at $20,000 and it goes up to 30,000, you don't get that mark-to-market profit on Bitcoin. You don't see that profit going through the financial statements. But whenever there is a decrease in value, you do see that write down. So it's not subject to market accounting at this stage. So I think that should also change over time. But Peter, you're a bit more up to speed with accounting standards than me. But did that make sense what I was saying?
Yeah, look, there's definitely an accounting standard that looks at digital assets, cryptocurrencies, Bitcoin. There needs to be one. I know where is it? Somewhere around the world, they actually do allow Bitcoin to be treated as digital assets. I'll have to dig up where that is. I'm not sure whether that's in Turkey or Japan or Saudi Arabia. I'll dig that one up. But yeah, the accounting profession is working on, I believe, coming up with a digital asset accounting standard. Not sure what that's going to look like, but I think we need to do an entire episode on accounting for digital assets. I mean, well, can there be a more exciting topic?
I mean, it's not exactly down the traditional rabbit hole, but like it's a little tributary of that rabbit hole, perhaps. The untraveled tributary of the Bitcoin rabbit hole is the accounting standards that are attached to it.
Yeah, it's a road. It's a road less traveled. It's not an exciting road, but it's a necessary road.
Well, it is, and it's a road that I personally travel every day at work. So it's not that bad. But yeah, it is interesting when you start incorporating digital wallets and blockchain transactions and gas fees and everything into accounting. It's a bit different. I mean, it's not that difficult, but it's different, and it's a challenge, and it's one that probably the accounting standards board has not kept up to speed with. So hopefully they will, and hopefully they don't come down on the wrong side of things and make a mess of it like they're likely to, I guess.
Yeah, to me that's like validity as to how early in its infancy that the digital asset space is. Like the fact that we cannot even read financial statements of companies that hold digital assets because they're meaningless if everything that is gap reported. It doesn't really make any sense. You have to rely on the management reports rather than the financial statements. So yeah, I think IFRS needs to update or provide some kind of guidance. And once they do, there's like you said, there's a whole new rabbit hole to unwrap.
Yeah, agree. And then there's the rabbit hole of taxation on crypto as well, and like that's a mess at the moment as well. Like that's something I think that holds back more adoption as well. So if you buy, this is probably more from a retail perspective than an institution perspective, but if you buy Bitcoin and then 2 months later when it's doubled, you want to spend it in a coffee shop, then that's a taxable event, to my understanding, and that's just ludicrous. So your tax return becomes just unmanageable. I believe in the US now, any purchase of under $50 is not subject to tax on using Bitcoin. I might be wrong on that, but that's my understanding. But I think the world needs to catch up on that, because if I go into if I see a retailer that accepts Bitcoin, even if they're selling something I'm never going to use, I'm likely to go in there and buy one, just because I want to spend Bitcoin and start using the network, which means my tax return is going to be an absolute nightmare. But yeah, so I think that I mean, it is now a legalized currency in two, I believe, in national jurisdictions. So maybe over time the tax rules on Bitcoin will change, but I don't see it happening anytime soon. They'd rather spend a lot of money and reprint all the UK banknotes with the king's head on instead of the queen's head first, which is obviously a really good use of money. I'm glad I pay tax to that.
Tax is a really interesting one, but I think super complicated as well, because you're talking about one, like from Bitcoin's point of view, you're talking about one currency, but however many jurisdictions there are in the world with different policies or taxation policies. So like depending on where you're residing in, then if you reside in Dubai or an Asian country with lower tax, then are you more incentivized to spend Bitcoin than country if you're residing in if you're residing in a country that does tax you on these capital events, if you can even consider it that.
Yeah, exactly. And then if you want to have a really messy tax return, just get involved in DeFi. It's a complete nightmare. Like every time you earn tokens or add tokens to liquidity pools, anything like that, every time it's a taxable event. So you have multiple taxable events happening every day. It's ludicrous. So
I just can't see the tax department having the resources to check on the tax returns for anybody who's involved with digital assets.
But there's so many platforms in the space that do these. The whole advantage of Bitcoin is everything is on the network. You can see it, but at the same time, it's supposed to be anonymous as well, right? But once you can attach someone's name to a particular wallet, then does that mean the tax office can just slap you with a tax bill because they saw a certain transaction? But it's so hard it's a very difficult puzzle to solve, I think, because what if this person has multiple wallets? Like they don't know that. I just feel like it's like endless.
Yeah. And then you go down the route of, when you go to a Bitcoin meetup in lots of parts of the world, there are people that will sell you non-KYC Bitcoin at a premium. So that's Bitcoin that's never been through an exchange that the authorities won't be aware of then. So yeah, it's an interesting space for sure.
What kind of meetups are you going to?
I don't want to talk about that, Peter. That's not really in scope for this conversation. The other thing I would say is that we're talking about these like tax regimes and countries having these like powers over citizens, and like this is properly far down the rabbit hole, but I would suggest that everybody that is interested in the changes that are happening in the geopolitical and monetary sense across the world should read The Sovereign Individual. It is like a rite of passage for every individual to read this book that is interested in this space. And if you're this far into this podcast and still listening, you definitely need to read that book. Because there won't be many of you. But yeah, no, I just find that book like completely fascinating. It was written in the late 90s, and it's just talking around about the changes that are happening as we migrate, so to speak, into the information age, the digital age, and what that means from a geopolitical perspective. And remember that this book was written long before Bitcoin was in anybody's womb. It was it's a long time before that, right? So this book predicts cryptocurrencies and a lot of other things that have come true. So yeah, highly recommend that book. But it is a rabbit hole, and it's not exactly a page turner.
If anyone's still listening, don't feel bad because I haven't read this book
you even
either.
born
But
then?
I will make it my homework to read this book in time for the next episode.
If you read it before the next episode, sorry, were you born before this book was published? That's a very good question. Right?
No comment.
I actually don't know what year it was published, but it was
I wasn't
late
born then
90s.
either.
Yeah, of course you went. But if you read that book before the next episode, Ranald, you are far better at reading these type of books than me. It took me a long time.
But while we're talking about books, the Bitcoin Standard, I think that's a must read for everyone. Just seeing the where humans have gone from and how we exchange services and goods between each other. We haven't always used paper money, coins. We've used stones and fish, or stones and rocks, and all these kinds of things. And it also goes through the gold standard and explains what that is and what it means when we moved away from that, and really the costs that we're all bearing as a result of that. And you'll no longer see, terms like quantitative easing as good for an economy or civilization. You'll see the harm that it causes and the dilution of wealth that results from that. So highly recommend that one.
Yeah, totally agree. That was the first book I read on the subject, and yeah, it completely changed my view on a lot of things. So I couldn't agree more. That's definitely a little bit earlier in the rabbit hole than the Sovereign Individual. So I mean, that's probably enough for today, but it would be really good if anybody's still listening to and has any topics that are related to both digital assets and the world of finance, accountancy, CFO world that they'd like explored. Please write in, message into us, and let us know, because we'd love to hear from you. Or indeed, if you've got any experiences in this space that you think would be good to share, please let us know about the experiences that you've had. If you want to get hold of me, you can find me on fixthemoneyfixtheworld@gmail.com. Peter, Ranald, have you got somewhere that anybody can contact you guys?
Yeah, you can contact me on dexterthebin@gmail.com.
Nice.
Excellent. Look, mine's quite not as exciting as you guys. Mine's just peternash@finset.com. Or check me out on LinkedIn, or just leave a comment below the video on YouTube. I'm sure you'll find me somewhere out on the World Wide Web.